This episode is brought to you by Audi. The road is calling. Embrace the thrill of the drive with the all-new, fully electric Audi Q6 e-tron. Featuring effortless power, serious acceleration, and advanced Audi tech. It's not just a new EV, it's a new way to experience driving. The all-new, fully electric Audi Q6 e-tron is here. The next chapter of Audi starts now.
It's back! The 2025 edition of our annual Pulse Report, where we unveil and break down the best user experience financial services has to offer, is out now. Our experts have been busy researching and analysing product experiences from every corner of financial services, from crypto to inclusive design. Find out who were named our Pulse Stars, the best of the best from 2024. Read our highlights from the state of UX in the industry. And discover the bold predictions that our experts have made for the year ahead. Visit 11fs.com/report to download your copy. Hello and welcome to Fintech Insider Insights. I'm Benjamin Ensor, Director of Research and Strategy here at 11FS. In this episode, in partnership with LexisNexis Risk Solutions, we'll be giving your organisation the ultimate guide to surviving the next 5 years. With the amount of disruption our industry has faced for the past half-decade, it can be quite easy to forget that it wasn't always like this. As we step into the second half of the tumultuous 20s, we need to take stock of what our industry will be up against. What does it really mean to be resilient? How can your business withstand fraud, cyberattacks, wars, and more? To help answer these questions, I'm joined by 3 expert guests. Firstly, I'm delighted to welcome Steve Elliot, Managing Director at LexisNexis Risk Solutions. Steve, thank you so much for joining us. Can you tell our listeners a little bit about you and a little bit about LexisNexis Risk Solutions, please?
Absolutely, and thank you for the chance to share some of this information. But here at LexisNexis Risk Solutions, we're passionate about using data for good. Data of all sorts to help understand more about people, understand about how they interact with society, understand the risks that they pose, and help businesses and organizations to understand, therefore, the broader risks that they have in running their businesses. So we take lots and lots of different data, we bring it together, we help provide insight from the data for the benefit of society, for individuals and for organizations. That's what we do.
Thank you and welcome. We're also joined by Dave Laramy, Senior Vice President, Head of Fraud Management, ABC and Tax Evasion at Danske Bank in Denmark. Welcome back to the show, Dave. Again, can you tell our listeners just a little bit about what your role is and what ABC is?
Sure. So I look after group fraud, anti-bribery and corruption and tax evasion prevention across the Danske Bank Group, and we operate mostly in the Nordics, but we have a UK presence as well, and some activity in Ireland and the US. So we're subject to lots of activity that needs to keep us resilient, particularly with the current geopolitical uncertainty.
Indeed. Thank you and welcome. And it's also a big welcome back to the show for Jessica Cath, a partner in financial crime at Thistle Initiatives. I absolutely love your title because it always sounds like you're an actual criminal. Can you tell our listeners what you really do, please?
I would be excellent at money laundering. But no, I like to. So here at Thistle, we build frameworks to prevent financial crime. So there's anything AML, fraud, sanctions related. And at the moment, we're doing quite a lot in fraud prevention, of course, with huge rates of fraud. So looking forward to the conversation today.
Fantastic. Well, welcome. Okay, well, let's get started. So to kick things off, let's unpack what resilience means in areas like financial compliance, fraud, identity risks, and why resilience and risk management are now more essential than ever before. So perhaps I'll start with you, Steve. Perhaps you can sum up for us what resilience means when it comes to these areas of business risk. What do you think of as you think about resilience?
Well, resilience as a word is really well defined by the regulators, so it's easy to refer to those and give you strict definitions. But that said, it's really all about understanding the risks that confront firms. And those are becoming ever more complex and fast-paced. As technology advances, as the processing power of computers advances at some pace, as the ecosystems become ever more connected at many different layers, the need to understand the forward risks that organizations are facing is becoming ever more complex. So resilience is all about using insight, using data, using expertise to work out how that ecosystem is changing, and then to pick into it to understand where the risks might occur, why they might arise, understand how you mitigate them, and then make sure the business is prepared to manage all of that. But at the same time, be prepared for the unexpected. No matter how good you've been at forecasting out the future, something is going to happen to catch you by surprise. So you've got to be prepared to respond to those, as well as ensuring that your forward planning is really effective.
Do you agree with that, Dave? Does it feel any different from sort of sitting inside a financial institution, or do you think Steve's pretty much spot on and that's how you all think about it too?
I think it strongly resonates what he said with how we approach it here at Danske Bank. But I think for me, it's about continuation of business. It means that customers and indeed fraudsters don't notice when we have problems. So it's about modularization to make sure that if one thing breaks, we don't then see everything breaking as it's built in series, and having backup controls so that when things do go wrong, we can easily switch to something else and continue to manage the risks that we face.
Jess, why is this becoming so crucial? I mean, it sort of seems obvious, but why is resilience such an important topic? Why are organizations sort of really trying to think about this now?
Yeah, it's a very, very complicated landscape. I mean, in the financial crime space, there's a huge rising sophistication in different types of financial crime that firms are dealing with. So, I mean, fraudsters leveraging AI, automation, new social engineering techniques. We've got deep fakes, synthetic identities. That itself is very, very complicated to deal with. We've then, of course, got a huge evolving regulatory landscape. And that's, of course, different on a national scale, and then global. It's very difficult. Cross-border, it can be challenging. So, of course, firms need to be continuously agile and staying up to date with things that are very, very complicated. But then a lot of our clients are actually just dealing with economic pressures and making sure that their operations are streamlined but effective, can address these changing challenges, but do it in a commercial and business sensitive way so that they can still operate. So there are so many different reasons as to why this is incredibly important.
Steve, how big a threat is this to sort of trust in financial organizations? Are we seeing signs that sort of customers are responding, customers are maybe, getting worried about particular firms if there's an incident? How damaging can some of these threats be?
Well, that's a very big question, and it depends which of the threats you're actually looking at. So, how big is the threat of fraud? How big is the threat from any other form of disruption? And the answer to that depends on which part of an organizational ecosystem you're looking at, and the sophistication, the determination of the individuals that are trying to disrupt it as well. So, difficult question to ask, but you also ask how concerned are consumers. Now, consumers, of course, want to ensure that they get the service or the goods that they expect to get when they make the purchase. They expect to have money flows that don't get intercepted. So they don't want their money to end up in a place that they didn't intend it to go to. They want to ensure that they can trust who they're engaging with, so that they're certain who it is they're buying from and getting the service from as well. So they have a really high expectation of security in relation to the supply chain. But at the same time, they want to be able to move faster than ever before now. They want to be able to interact with more organizations, to be able to go faster, to understand more, to have more meaning from the data. So understand whether, when they're investing, for example, whether they're making the right investments for them for the future. So they want more knowledge, so they want more pace, and that creates more complexity in the ecosystem. So they're concerned, but I think the firms are acting fast and embracing the current technology and AI and all the other things that you hear about in order to provide all of that assurance.
I think that anything in the financial crime and cyberspace is inherently noisy from a media and customer perspective, particularly at the moment. You only have to look at the banks today, and I see that at least 3 have got problems today on one of the peak processing days of the year. And I think that's what drives some of the attention that we see from customers, and to make sure that they feel heard and they feel that actually their banks do work for them when they need us.
There's a really, really important element in that as well. And a lot of the consumers can't actually see the amount of work that's done in the background. So they'll see an occasional story in the media, in fact, quite a lot of stories in the media about someone that's defrauded, for example, but there are thousands, tens of thousands, hundreds of thousands of incidents in the background where things are spotted, intercepted, and prevented. So there's a huge amount of work that's going on to make sure that organizations are resilient and protecting the consumers, and far more than many of the consumers can actually see.
Yeah, that's a really tricky one, isn't it? Because you don't want to say too much about the exact details of some of the things you're doing, particularly in areas like cybersecurity, because you don't want to sort of tip off the cyber criminals. Jess, I was going to bring you in on this sort of, the sort of arms race question. Because if you act as a Luddite, you can say, none of this was a problem 30 years ago, 40 years ago. Technology's enabled all of this, all of these sort of threats, which isn't true, of course. But there is this sort of arms race of established organizations, firms trying to embrace and use technology to sort of protect themselves and create resilience. But at the same time, you've got the criminals taking advantage of advanced technologies. Who do you feel is winning that race, or is it just constantly changing?
Yeah, it's a great question. And to your first point, this is not new. There are just new technologies that are enabling different methods of conducting crime. So we've had this for a long time. Of course, you've just got new methods, which increase the risk and make it more challenging to control, but it's always been there. So if you take, for example, identity verification, it's a continuous arms race between the selfie and the deep-faked image, and then looking for something else in order to control, to make sure that you're actually dealing with a real person. So now I've seen new tools and new vendors that are producing tools that will look at the depth of somebody's face. So it's not just a single layer. You're actually thinking this is a real person and looking at the 3D image. This is just part of the continuous arms race that we're looking at. However, it is an arms race and it will continue that way. So we need to make sure we are continuing to innovate and looking for new methods. It's what keeps me in a job, though.
Indeed. Dave, thinking about, financial institutions in general, so not Danske Bank specifically, just thinking about your peers, what are the things that are keeping people up at night? I mean, there's a lot of nightmares here. There's inflation, there's low growth in European economies, there's rising interest rates, there's tariff threats, there's supply chain uncertainty. There's all sorts of challenges. What do you think's keeping sort of senior executives in financial institutions awake the most?
I would say that the first thing to do is to make sure that we keep the lights on. And that means both literally and figuratively, making sure that our platforms, our services, our helplines, all of that sort of thing remain resilient and open to support our customers, as anything in that space tends to unsettle quite quickly. I do think that cybersecurity is definitely up there. I mentioned the geopolitical instability at the moment. I think that is absolutely critical, and we will continue to invest as an industry in there. And we are concerned about the more sophistication of fraud, the way that it can scale much more easily now, and the arms race that Jess mentioned earlier around how we make sure that we are able to detect what's happening, stop the volume attacks, and sort of step in on those really targeted attacks too.
Steve, to the point too, Jess was making about the arms race and so on. What's your sense of how firms are doing in general? I mean, obviously there's a huge diversity of ways in which different companies are reacting, but would you say that overall there's just too many firms that are just scrambling to react, or are sort of businesses adapting fast enough? And kind of what's the differentiator? Is it sort of big firms with lots of resources are better placed and smaller firms are struggling, or is it? Can you characterize the response of the industry?
Another big question, and if I look at impact on industry first, okay, at one layer, the impact is different across organizations dependent on scale, particularly around the compliance elements of it. So there is a compliance cost burden that firms must incur in order to do business. And of course, the larger firms are going to be able to incur that cost with greater ease than the smaller firms that need to clear the barrier in order to gain entrance to the market. That's not to say it's inexpensive for the large firms. They spend a considerable amount ensuring compliance. And in fact, we've done research that shows the cost of compliance to financial services in the UK is only just short of the UK's total expenditure on defence. So that's financial services of firms.
Seriously?
Alone. That's right. But
that's amazing.
To go back to the arms race element of that, that's where it gets really interesting as well. If you perhaps think of how people used to be identified by organizations, they would give a proof of identity. They'd give a document, and the firm would be satisfied that they were doing business with a certain person because they were happy with that document. That was relatively easy to get past because you would just produce the counterfeit document. And if it's good enough, you've persuaded the firm. Where organizations are today, though, is they would look not just for that, but they'd look to risk rate an email address. They'd look at the device the person was using. They'd look at the history on those elements to find out how risky or unrisky those elements are. They'll look at many other points across the connected ecosystem, so who each one of those are connecting with. So you start to layer in data point upon data point upon data point and the relationship across complex networks. And it actually becomes really difficult for some of the fraudsters to recreate a fake network that actually gets past some of the controls. So the race is on, but firms are more equipped now to produce resilience or deliver resilience by looking at more data points in a faster changing environment that makes it much more difficult for the criminals to keep up. So they look for simple ways in, but the ways are getting more complex.
I think to kind of build on that a little bit, we've moved from a tick box of compliance to an overall risk picture of where does the story make sense and how do we accept that customer and what they're saying. And they may have some areas where we're a little bit unsure, but overall the picture is something that we have risk appetite for as an industry. And I think that has moved significantly in the last 5 years in particular.
Jess, where do you think the bad actors are going to go next? Because there's all sorts of technologies, blockchain, cryptocurrencies, AI, particularly generative AI, quantum computing, and so on. Where do you think the bad actors are going to sort of move next? I mean, obviously they'll go wherever the weakest link is, but which sort of technologies do you think they are probably starting to try and exploit even now?
So I think to your point around the differences between more mature firms and more immature firms is absolutely stark. So we deal with some really large firms and some brand new startups. And the differences in control frameworks and resilience levels between them it's the difference is absolutely insane. So when we're talking to Steve's point about all of the new data points that are available and the new technologies that you can use, so looking at swipe patterns, looking at how people are engaging with their phone, looking to build networks and risk rate in really complex ways, yes, that's available. And yes, a lot of big mature firms are doing that, but there is a lot of players that are not doing that. And I am still seeing some very basic rules-based monitoring, not a lot of risk rating taking place. And those firms are clear targets still for criminal actors. And as soon as a criminal group identifies weaknesses in a firm, that firm will be subject to fraud spikes. For example, it might have a money mule group. It might have multiple different groups targeting that firm. And ultimately, quite often, these firms have to put a full stop on any payments taking place until they sort all of that out. So it can be very, very different, and firms will target these areas. We are, of course, seeing a lot of this in the crypto space as well. However, UK-based crypto firms that are registered with the FCA have exceptionally strong controls because they had to meet a very, very high standard to get registered in the UK. So it's not necessarily about the industry type sometimes. It's around the maturity of the specific business and how strong their controls are in relation to the specific transaction flows, customer types, and risks that they're dealing with.
That's such an interesting point. But you said you were seeing huge differences between sort of established firms and startups and so on. You didn't quite say which ones were more sophisticated in their approach, or are you saying actually it really depends on the firm and you can't characterize it by type of firm?
Exactly. A lot of people may say new payment startups. They might be a higher risk industry to deal with. Yes, they often are. But often they might be doing something in a brand new way and adopting quite sophisticated controls quite early on. But it really depends for me on the culture of the firm, whether or not their senior leadership is actually looking at fraud and understanding that if you don't get fraud right, you do not have a business and you need to attack it.
And there's something about agility there as well, and the speed to react. And some of the more traditional banks are a little bit slower because they've got more to do in terms of improving those controls. Whereas some of the startups can think, oh dear, we've got an issue over here, notice it immediately and make the required changes quickly. And so there is a balance between those approaches to be had there.
Steve, to Jess's point about, the sort of culture and whether the executives really sort of are focused on risk and fraud and so on. What are some of the sort of horror stories? What are some of the examples of lack of resilience that really should make every sort of executive sort of sit up and take notice and pay attention?
Well, I think Jess got it out really well. The culture matters because, in fact, when you're running a business, what you're trying to do is deploy your expenses efficiently in order to maximize revenue return for the organization. So if you think about deploying expenses, you could spend money building in lots of controls, or you could spend money in recruiting lots of sellers that go sell your product and run risks at the back end that it's all going to go wrong. So culture does matter. And there are certainly horror stories where leadership have got the balance wrong. The culture does need to focus on ensuring that there's protection for consumers, because not only will the organization be harmed in the event that they get it badly wrong, but the consumers that have placed trust in the organization are going to be harmed as well. So I'm not going to call out names or specific examples. It would be wrong and improper for me to do that on a call like this. But there are many points across organizations, and there's a long history of examples that are easy to find, should anyone want to search for them, where the balance of that deployment of expense and the control environments have been poorly placed.
As a quick aside, insurance companies are meant to be good at risk management. Have you seen do you get any sense that the insurance companies are ahead of the sort of investment management firms and the banks, capital markets companies and so on at managing some of these risks? Or would you say insurance companies are actually in kind of the same kind of state as the rest of the financial services industry?
The insurance companies live and breathe risk. I spent many years myself in insurance companies as a money laundering reporting officer, actually, and then other roles for them. So saw very much what they were doing through a number of years. But I think it's very difficult to say who's good and bad, who's best, who's worst. Those are almost too simplistic in terms of their analysis, because there is a range in every industry. Generally, financial services organizations in the UK are very good. The risks that they're exposed to are well known, and there is a real will, from what I see, to make sure that consumers are protected and looked after, and that actions taken ensure that the business exists for the long term. So there's good behaviours I see broadly, but of course, as we said earlier, there's always new attempts to break the system that are being driven from the outside. And there are lots of examples where firms have reacted faster or slower to those new attempts. So I think the general message is resilience seems pretty strong, but it's pace in looking for the new, adapting to the new, that is sometimes better or worse in different organizations at an organization level rather than an industry.
Okay. Well, thank you for all three of you for sort of talking through why resilience is so important. Let's take a very quick break and then come back and talk about what organizations can and should be doing to protect themselves and the tools they need to safeguard their businesses for the remainder of this year and beyond.
Cybersecurity is the top concern for UK businesses, according to Vanta's recent State of Trust report. But whether you're a startup founder or an experienced security professional, Vanta is here to help. Businesses use Vanta to establish trust by automating compliance needs across over 35 frameworks like ISO 27001 and SOC 2, centralize security workflows, complete security questionnaires up to 5 times faster, and proactively manage vendor risk. Join over 9,000 global companies like Flow Health, Synthesia, and Alica Bank, who use Vanta to manage risk and prove security in real time. For a limited time, get $1,000 off Vanta at vanta.com/insider. That's VANTA.com/insider for $1,000 off.
This episode is brought to you by Peacock. The new Peacock original documentary, Matthew Perry, A Hollywood Tragedy, dives deep into the beloved actor's rise to fame and his tragic death. 5 people, including Perry's personal assistant, 2 medical doctors, and an alleged Hollywood drug dealer known as the Ketamine Queen, were charged with conspiracy to illegally provide Perry with the ketamine. Explore the details of the case in this heartbreaking special, streaming now only on Peacock.
Welcome back to Fintech Insider. In this half of the discussion, we're going to talk about how businesses can look to improve their resilience by looking at four main areas: data, fraud, compliance, and identification. Jess, I'm kind of keen to come to you first. How are companies sort of really trying to take advantage of things like data to try and become more resilient? How are companies sort of using data to get smarter about the risks that they face?
So again, I see a huge range of data use. Of course, data is absolutely critical when it comes to financial crime and fraud prevention, particularly in terms of identifying patterns of normal behavior versus abnormal behavior, looking for anomalies, analyzing all of the different data points that we mentioned earlier. So it's absolutely key that you have those data points, but how firms use those is wildly different. Some firms have the ability to build different things in-house. Some firms don't have the ability or the engineering capability to use data in quite different and specific ways. But ultimately, the more data you have, the better those detection models will be. But you need to have the ability to use that data, and it needs to be clean and accessible. So data is key, but you need to be able to use it properly. And a lot of firms are still figuring out, how do I use all of this data to try and look for that classic needle in the haystack?
But a lot of firms are getting that right now. There are levels of data again. I keep starting responses by saying there are levels, but there are. This is multi-layered. I've been in the industry now for 30 plus years, and I remember years ago firms were saying, if only we had more data, we could solve some problems. Today they're saying, if only we had more data, we could solve more problems. They've been saying the same thing for a long time. But what is the data? They used to try to get more data within their organization. So organizations had multiple accounts or policies, depending on the type of firm, but multiple records for the same individual. And those records looked different and they weren't connecting it together. So it meant that their expense was higher than it should be because they were inefficient in managing the data. The level of knowledge and support for the customer was poor because they had different profiles. So they got slightly better at looking at their internal data and consolidating that together. Then they said, why don't we have more data across the industry so that we can see if the person is creating a threat somewhere else at another firm and then they're targeting us. So that was improved a little bit, but not as well at some firms as it should have been. Then they said, why can't we see across industries? Because there are vulnerabilities in some areas that expose other parts of the ecosystem to more vulnerabilities. So they got a bit better at that. But all of that is available now. The data services behind the scenes enable firms to get certainty about who they're dealing with right across ecosystems. And by that, I mean across multiple industries, multiple firms. So they're able to get more certainty about who they deal with and what risk that poses. But there's a level of knowledge firms need in order to be able to access that. So they need to be able to access it, and then they can solve some of these risks.
I might disagree with you a little bit there, Steve, because I do think, of course, there's a lot more data available now, which is great, but I do think there's still more to do with data between different institutions and across industries and across collaboration. We do have things like, we've got multiple different data sets. We have the CIFAS fraud database, but the FCA published the analysis of CIFAS recently and identified a number of weaknesses in that data set. Still, institutions are not necessarily sharing instances of fraud between each other very well. Even with the CIFAS fraud database, the level of definition in which firms can report instances of fraud to that database is so high that people are not doing so. So I think, yes, identity verification is easier and there's lots of good data points there. But actually, a lot of fraud is committed by legitimate people. And trying to identify those are I still think we've got a little bit of a way to go.
And that's looking at it through the lens of a firm. So if you're looking across the ecosystem from a firm, then your view will be limited. But if you're looking at it from data organizations that can already see across multiple firms, multiple industries, multiple layers, so consumers to businesses, to transactions, to account opening, actually the data is there already. So what the firms need to do is to be able to access those services through the big data providers. And we can see fraudulent systems being set up across multiple industries, across multiple firms, and we can be really specific because we can see them targeting particular firms. You can see money laundering networks being set up. So it's there already. but you need to access the big data firms in order to do it.
And to build on that a little bit, I think that we need to protect the data as well. So as the value of data has definitely risen over the last few years, so has the people attacking it. And they share it much more easily than we can, or indeed should do, across the industry because of the constraints that we have in sharing little. So for example, card numbers is now widely attacked and is easy to get along with data from data breaches, and they merge it together. And now we're having to move to a world of tokenization to protect the data leakage that we've had in the past. Because once it's out there, it's out. And it's very difficult to go backwards down that path. So whilst the data breeds transparency, we're now having to protect the bits that we don't want to be transparent to drive that forward. But sharing across the community is absolutely critical to prevent fraud for the future. I strongly believe that.
And Dave, as a Briton currently living in Denmark, are you seeing any differences in attitude, across the different countries you're working at? I mean, because the Nordic countries have a reputation for being more collaborative than, let's say the British or the Irish. Are you seeing any sort of differences in attitudes in people that you're talking to and working with?
Sure. I think there's a very strict interpretation of the General Data Protection Regulation in the Nordics, which actually makes it harder for us to share both within countries and across countries to do that. And each country has a different interpretation as well. So we can't do the same. We have to do different assessments on each, which makes it much harder for us. We want to share. There's some things we share, but definitely our strategy being encouraged by the trade associations and the governments in each country who are worried about the growth of fraud and scams want us to do more and will help us with that regulatory framework that we need in place in order to do that. But we want to lead the way.
Thank you. Do we need more sort of industry or government collaboration? Jess, maybe this is one for you. Do we think that governments in the UK and more widely are really sort of understanding this and stepping up and helping to sort of encourage and drive industry collaboration? Can industry associations be doing more to encourage collaboration? Are you seeing good examples coming through in some areas?
I'm seeing a lot, almost too much. They almost need to be streamlined. So we have some amazing industry associations. I sit on the Financial Crime Working Group at the Payments Association, for example, and they do a lot of work and have done a number of pieces around, for example, APP fraud mandatory reimbursement and the requirements around there. What I don't think we need is more regulation and more regulatory frameworks, because we have enough of that. And it's a very tight regulatory framework, particularly in the UK. Even the FCA has come out recently noting that they are going to slow down the pace of regulatory change because we have enough in place already. But of course, it's just, I think, bringing all of those together. And one thing that I try to do more so is to bring together different firms from different sectors. So a lot of associations are structured in sector bases. So you have lots of great associations that are for banks. You have some for payments, some for crypto, and they operate in silos. So bringing those together is really important.
Got it. Any thoughts on that topic, Steve? Do you agree with Jess?
Yeah, I think that the silo point then again is absolutely relevant. It goes back to the problem we were talking about earlier. Even though there's some good practices in place and some real will to do right by the economy in total, a lot of organizations are still looking in a very narrow way at solving the problem. And yet consumers move across different types of services. They can move across multiple organizations. They're using different devices to connect with the ecosystem in different ways. So actually collaboration requires much more joined up collaborations across multi-sectors, multi-industries. But there is a real challenge at the heart of this. We go back to security, we go back to resilience, we go back to what consumers need. And that's what we need to address, I think, is what does the consumer actually want from this? And the consumer could have incredible security if they hold their data alone, share it with no one, and only present it when they go to an organization. But of course, the organization won't be able to verify them. They won't be able to get access to service or product. It will be easy to impersonate them, so they'll be vulnerable to fraud. So there's got to be a level of sharing. But the more you share, provided it's governed really strictly, the more access you get to service. So we need ecosystems to operate really effectively for the benefit of the consumer so that they can buy, trade, move, communicate, socialize effectively with trust. And that requires sharing of data. So I think that big question, what do consumers really want, needs to be answered. And when you do, you see actually data sharing matters.
I think we have seen the criminality become much more international in the last few years with the sort of scamdemic and the setting up of call centers in far-reaching jurisdictions where we have problems. And I think some of that approach to data sharing has been very nationalistic in the past, and we need to think about whether that's going to address the fraud of the future, because we are not clear exactly what's attacking domestically and what's coming from abroad and how we manage those threats within our own ecosystems.
You're right. And you can look at that across the ecosystem as well. I truly believe, and maybe I'm an optimist, but I truly believe we're getting to the point now where we can start to get ahead of the criminals, because the volume of data that we can look at, the pace that we can look at it, the connectivity across the data now, the AI that we can run on that to provide insight that tells us that the truth in some of the data is well ahead of where some of the criminals can get to. I'll give you a great example. Examples bring it to life. You asked earlier about vulnerabilities. We saw in the UK an increase of synthetic fraud identities. So people would create apparently fake identities with some characteristics that would look real, that would enable them to bypass the system. But in truth, even that doesn't have enough in it to look truly real if you look deeper. So you, for example, anyone here, if you studied, you might have an education certificate. But if you study it at a particular place, you'd have a ecosystem around you. You would connect with people in a certain way. You would have a wealth profile back then. You would have all sorts of other profiles. And as you dig deeper into individuals' histories, you can come up with profiles that should show what a profile should look like. And it's almost impossible for the fraudsters to fake that. So they can create fake identities at specific points, but they can't create a credible synthetic identity if you're looking at the ecosystem in its entirety. So again, using lots of data quickly with technology and running insight off it allows you to actually get beyond the criminals.
I want to come back to that. Thank you. I want to come back to that point that Dave was making about sort of international collaboration, and even the point you were making, Dave, about, just GDPR being interpreted differently in different countries, because at some level, some of these threats are actually coming from state actors, right? We know that there are criminal gangs that have state backing in some of the rogue states like North Korea and so on. And so national collaboration is great, and as we were saying, there needs to be more of that. But, maybe Jess or Dave, do we need to see more collaboration across countries? Because at the top end, we are facing, international criminal state-backed organizations.
I mean, from my perspective, when we talk about large organized crime groups, the boundary between state actors and organized crime groups is very, very blurred. North Korea is a great example, but a lot across Russia and others as well. Slightly off topic, we saw the world's biggest heist recently from last week from the North Koreans stealing 1-point-something billion from a crypto exchange in Dubai. And this is all something that cannot be solved just through individual nations working in silos. But of course, when we start to look at the geopolitical environment, we are not working in the best environment for, regional collaboration. So yes, we need to, but I'm a little bit skeptical about the direction of travel. Although we are seeing lots of really interesting initiatives, particularly in the fraud space, with nations looking to work together to reduce fraud.
Yeah, I'd agree with that. I think if we look at some of the models, for example, Australia and Singapore, where they're doing things slightly differently, some of the task forces that we have across the Nordics to look at fraud as a totality, where we are working with big tech, where they want to play, with telcos and across the industry and with law enforcement, we are taking some steps that do cross some of those country boundaries. And for example, we do see Swedish criminals coming to Denmark and vice versa, and there's close cooperation there. And so I think where we can, we should, and we will. But I take the point that isn't always possible. I don't think anyone's going to get any money back from North Korea following that heist.
No. Steve, I'd love to get your perspective on the role of artificial intelligence in building resilience. I mean, what you were just saying earlier, it was about how you can sort of once you dig into an individual's profile, you can start to tell that someone's fake because they don't have the connections, they don't have the back history, and so on that they want. That they should have. Presumably, you're starting, using elements of automation and so on to do some of that digging. How relevant is AI in building resilience in identifying sort of dark patterns and so on?
Well, it's relevant today, and it will become more relevant in the future. So the benefit of AI is it gives you insight. It gives you better ability to predict what's happening today and what is going to happen in the future. And that's relevant at so many layers again. You can look at it in the credit markets, for example. And traditionally in the credit markets, when people have been given access to credit, the organizations have looked at that individual's history. What they've not been so good at is working out the person's future ability to pay. So AI is using larger data sets. It enables the use of larger data sets to have a deeper look at the individual's future likelihood to pay that is opening up the potential for organizations to give more credit to the individuals. Okay, that's good for resilience overall. It improves economic activity across the markets and it gives organizations more certainty that they're lending to the right people in the right way at the right risk. And the same models apply all across areas where data is being used. You can predict fraud more accurately. You can predict the emergence of money laundering networks more accurately. So it is having a early impact already, but the impact will grow.
One last topic I'd love to touch on is digital identity. Maybe this one's for you, Jess. I mean, would having better, stronger digital identities help? And we were talking earlier about how, increasingly, past methods of identity are getting overtaken by technology. Is stronger digital identity helpful?
Definitely. It's a frustrating one in the UK. We've been talking about the digital identity and trust framework for a long time, but we're constantly playing a battle between people not wanting to have a digital identity or holding on to the privacy angle versus wanting access to faster payments, access to all of your online banking, access to lovely app-based user interface banking services. So we've got this real challenge between the two, but having strong digital identity frameworks is going to be key. And that is one of the pieces of regulatory frameworks that I do actually think we need to have in the UK, and we need more of a structure in place for that. But I think there are a couple of issues here, particularly around vulnerable customers and different types of identity, because we are still in a structured way of verifying identity. So I had a client who was dealing with migrant workers to the UK. How do you build up an identity profile for those when they don't have a fixed address, when the account is being opened on their behalf by their employer in the UK? And we had to look for different data points in order to verify that identity safely, because you don't want to restrict them and to prevent them to have access to financial services, because then, of course, they are restricted to using cash-based only and don't have access to that service. So there is a balance to be played here that we don't quite have right.
And we, in the Nordics, we do have a federated government database that's used across everything that you do in your life. The problem is, once a fraudster has control of that, they literally have control of your life. So to protect that data and protect that digital identity is really important. But it does cover people that have migrated to the country and enables that sort of build-up of that evidence trail over time.
Such an interesting set of points. Okay, we've got time for one quick last question. I'm not going to pretend that the vast majority of the listeners to this podcast are C-suite, but there's a few. So for the senior executives, or for people who advise senior executives listening to this, what is the first thing they should be doing? What are the things that senior executives should really be thinking about to try and create more resilience in their organizations? Maybe Steve, you first. What's sort of one big thing senior executives should be thinking about or doing?
Well, I suspect the senior executives already have their handle on what they need to be looking at, and they've probably got their focus correct. But of course, I've gone to data a few times, and the pace of change that we're seeing at the moment is something that all executives need to grapple with. What they're looking at today is probably going to be different to what they need to look at in a month's time. The pace is moving so fast. AI is having so much influence now across organizations. The data assets that can be utilized in order to enable the organization to do what it needs to do are changing fast. What that means in terms of organizational models is changing fast, and so on. So pace of change really matters. And to get that right, you need real competence within in an organization that's not just resting based on the experience and decisions they've made in the past, which we still see a lot of, but you need individuals that have the ability to understand how fast and in what way the future is changing so that they can embrace that. So competence and skills to embrace that are critical at the moment.
Thank you. Dave?
I think there's an element of scenario testing here that's really important for the C-suite in terms of, your business well, how would you attack it? Then ask other people how they would attack it and try and build those scenarios, some more common, some more extreme, and see how you can strengthen those controls that when you try and sort of attack them, they break. And breaking it yourself is far better than someone else breaking it from outside.
I love that. Jess?
So to Steve's point on the pace of change, I'm having a lot of conversations around changing the MI data that is going up to the C-suite. So what data points are you receiving? And have you got enough or too much or the right data points for you to get comfortable on things like fraud rates, for example? And those things are not static and they do need to be reviewed to make sure you are still reviewing the right data points as things change.
I've absolutely loved this conversation. The three of you have been absolutely brilliant, but unfortunately we're out of time, so we'll have to do another episode with all of you on it. So thank you so much. Where can listeners find out a little bit more about each of you? Jess, where can people find out more about you and about Thistle?
Just on LinkedIn and the Thistle Initiative's website.
Dave, where can people find out more about you and Danske, Michael?
Same for me. I love LinkedIn. I'm always on there.
And Steve.
And I'm going to be really boring and say the same thing again. So I'm on LinkedIn. Look for LexisNexis Risk Solutions and you'll find me under Steve Elliot.
And you can also find me, Benjamin Ensor, 11FS on LinkedIn. So thank you all so much for listening. If you've enjoyed what you've heard, please do follow the podcast, tell your friends about it, leave us a review, help other people find the show. If you want to join the conversation, seek us out on social media. Just search for 11FS or Fintech Insider, or you can even email us at podcasts@11fs.com. Thank you all so much, and goodbye.
Cybersecurity is the top concern for UK businesses, according to Vanta's recent State of Trust report. But whether you're a startup founder or an experienced security professional, Vanta is here to help. Businesses use Vanta to establish trust by automating compliance needs across over 35 frameworks like ISO 27001 and SOC 2, centralize security workflows, complete security questionnaires up to 5 times faster, and proactively manage vendor risk. Join over 9,000 global companies like Flow Health, Synthesia, and Alica Bank who use Vanta to manage risk and prove security in real time. For a limited time, get $1,000 off Vanta at vanta.com/insider. That's VANTA.com/insider for $1,000 off.